Welcome to the Debunking Economics podcast with Professor Steve Keen. I'm Phil Dobbie, and today, banks of the future. Fintech companies keep reminding us that they are the future of banking, and the old dinosaurs will have to step aside as new technology makes banking more efficient, more competitive, and more customer-friendly. Customer-friendly banks, what will they think of next? But will the fintech companies ever take control, or are banks here to stay? And what will banks look like in, say, 20 years' time? That's today on the Debunking Economics podcast. So when I transfer money, which I do every month, from Australian dollars into the beleaguered UK pound, I don't use a bank. I use a company called TransferWise, which is a very neat mobile phone app. And they charge me what's called the mid-market rate, the halfway point in the spread between buy and sell rates for currencies, with no fees on top. Whereas my bank would charge me the buy or sell rate, depending which direction it's going and whichever is the worst one for me, plus a bit more, plus fees. Now, this idea of TransferWise supposedly started, if you believe the PR, because two Estonians, one who was paid in sterling, who owned a property in Estonia, and one who paid in euros but needed living expenses in sterling, decided they should start to basically transfer their currencies amongst themselves. And then they extended it to a sort of Skype club with other people who needed to move money around. So this, in effect, created a peer-to-peer relationship for money transfers, which is a bit like Skype does for phone calls, with no bank in the middle of it all. So, Steve, I guess the question is, how far can this peer-to-peer approach, facilitated by technology, replace the old-fashioned centralized approach of banking? Because I guess cryptocurrencies are a bit the same in this, aren't they?
Yeah, I mean, in terms of enabling transactions, particularly transactions between nations, there's a lot of room to go, because the banks really were living off very, very fat margins, as you just implied a moment ago. Not just fat margins, but old-fashioned technology as well. It often took 3 days for a transfer to go through, and that wasn't because of just trying to exploit your balance in the meantime. It literally was that slow in the internal technology. That's been addressed recently by SWIFT, amongst other organizations. So now those transactions take as many minutes as they used to take days. But there's still substantial fees slapped on by the banks. And they, as you say, they offer you the worst rates at each extreme and so on. So TransferWise, which I also use, and I think I talked you into it, didn't I?
You might have done, yeah. Or the guys at one of the banks, funnily enough, who probably, I shouldn't mention that. They're
truly brilliant, very, very cheap, and much, much faster than the banks have been able to do so far. Yeah. So there's plenty of room to exploit that, which you have to have internet technology to make that possible. So this was not something which was possible even 10 years ago, but it's certainly quite feasible now at the level of transactions. Now,
I don't know how much of they're buying and selling money that's not in there. I mean, they talk in, and I think part of it might be PR talk, but because they talk about it all being peer to peer, but it happens instantaneously. So the idea that I want to buy sterling at the same time that someone wants to sell Australian dollars seems a bit unlikely unless their network is huge. But if their network is big, then I guess it is a peer-to-peer relationship, and they don't need to call on banks. I'm fairly certain that they will be calling on the wholesale money markets at some point in their process.
They do transfer between bank accounts, but what they're doing is they're doing it informally rather than by putting in. Like, if you think about how you make a transaction from a bank in Australia to a bank in the UK, for example, then that has to go through the SWIFT system, and there's a bank-to-bank message at some point. And what they have managed instead, and I don't quite know how, but
they just transfer to a local bank account in each place.
Yeah, local bank account, and then they then do a balancing thing on their so they send it. You make a transfer to a local bank account. So that's actually, of course, that's what's going on. I do it regularly myself. So I make a transfer from my Australian bank account to TransferWise's Australian bank account, and then TransferWise would send a signal to its counterpart in the UK saying the money's been deposited in the Australian account, then make a transfer domestically from your TransferWise's domestic pounds account to Keen's domestic pounds account, and all you're paying is local transaction fees. You're not paying the international one. Yeah. And what they're relying upon is not so much simultaneous transfers going in the opposite direction, but sufficient volume coming in from the different accounts to mean that there's a buffer. It means if one goes down, the other can go up the matching amount.
And that is exactly the same as the toll avoidance approach with Skype. I mean, Skype was peer-to-peer, where you make a phone call, and if you're calling someone else on their network, then you don't need to worry about paying any fees. But if you were calling a number in a different country, I mean, Skype used local numbers, the same as they're using local bank accounts to try and avoid the international charges. So it's a bit the same as that. But I mean, there's other areas as well, aren't there, where people are trying to do what banks are doing, and the point of today is to discuss how far they're going to chip away, and what bank could be doing to retaliate, and also the question of how much regulation is there needed if people start to work in the areas of banks. The other area that people have tried is with loans. I've got a bit of money I want to save. I'm not quite sure who would be doing that now. Someone else wants to borrow some money, so you develop a peer-to-peer network in the same way. Can that work? I know that there's no opportunity to create currency in that process, but could that work?
Well, that's the point. It isn't opportunity to create currency. So all you've got is the limit of the capacity for that to happen is the amount of money people don't need, who are putting that money aside to save. And speaking personally, I've just been through the experience when some time ago I thought I didn't need money, and now I do. And oh boy, does it cramp your lifestyle when you do a peer-to-peer loan. But if you've got, if you think again who's going to take advantage of that, it's going to be, of course, the wealthy into the social stratum, having spare cash and getting a higher return on it than they get by putting it in bank deposits, by making it available to people who are fundamentally either tight financially at a particular time or lower down the income scale. So it's still going to involve a social class transfer in the wrong direction from the poor to the rich.
So worse than having a bank as an intermediary in a way, because there's, I guess the people who do it peer to peer would do it because they weren't getting a loan from the bank, so they're going to accept a worse exchange rate from someone else, a worse interest rate from somebody else.
Not necessarily. I mean, this comes down to whether you can actually get availability of loans. Because one thing where the banks are leaving themselves quite vulnerable is that they've simply ceased lending to small business, and this is quite extreme. I mean, the case I'm involved in is an instance of that, because let's say a person who is close to me could not get a business loan because the bank that she has banked out for decades no longer has a local branch manager for loans. So you've got to apply to somebody in the remote location of Sydney to get this loan, and they don't know you from a collection of bits and bytes in the matrix. And they are doing assessment whether you get the loan or not on point scoring systems, and the point scoring systems, well, whether you have income. And now if you're a local entrepreneur seeing a business opportunity and you want to take advantage of that, and you're right because you're in a local area. In the past, with a local bank manager, the Jimmy Stewart style, he or she would know that you were a reliable person or had good ideas in the past. That's going to work. Here's a loan, and it's a perspective. We might charge you a high rate for it, but you'll get it.
So couldn't peer-to-peer lending work and step in there then? I mean, we get used to now, don't we, rating everybody on the internet, whether it's an Uber driver or whether it's an Airbnb. Are you a reliable customer for loans, for example?
The trouble is, though, you can't do that. That just doesn't work on a one-off scale. Uber and stuff like that. I mean,
lots of transactions. Yeah.
I've rarely been with an Uber driver with less than 500, ratings. But you don't make 500 loans. Certainly as a small business, you make one. And so the rating system that works at the Uber level and things like that simply won't work for peer-to-peer lending.
Right. But cryptocurrencies, that's new money that is created without banks. It sits aside from banks. So we'll look at that in this discussion. And also, why aren't banks moving forward and adding more of these special apps and customer-friendly additions to their services that their competitors are offering? Why aren't they getting smarter with the consumer? We'll look at that and much more in the full version of this podcast. To listen to that, you need to be a supporter of Steve Keen on Patreon. Go to patreon.com/Prof Steve Keen. If you provide $10 or more support each month, then you get access to this in full, plus all the other podcasts in this series. And there's 120 or more of them so far. Or you can subscribe at debunkingeconomics.com. Choose one of these subscription options in the right-hand side on that website. We'll be back again with another podcast very soon. Thanks for listening. Hopefully we'll see you back here for the full episode. Thanks for listening.